As most of you know, I made over 7 figures in crypto, and I believe the next real opportunity is being built right now. And here's the proof, because we could see in late 2025 how more people were looking for Bitcoin bear market as compared to the 5 years before that, which means more than the 2021 crash and more than the actual 2022 bear market itself. Just so you know, normally a spike in that volume means that we're close to the peak before the bottom kicks in. But watch what happens next, because by May 2026, we could see this search interest for the same thing being at its all-time low as compared to the 5 years before that. This proves that retail has completely lost its interest, while Bitcoin is sitting at a 4 to 5x higher as opposed to those 2022 lows. Now, real quick, my name is Arno Vanmassenhove, and in the last couple of years, I've acquired over $1.5 million before any coaching at all. Right after that, helped over 200 plus people to build a second income online. I've been in this space for almost a decade, and I have the honor of being the bestseller author of my book called Unchained, which you can find on Amazon. And the reason I shoot videos like this right now is because I believe in a few months from now, people will look at you and tell that you were lucky. They will blame that they never had the opportunity. But the point is, they just never took it. See, there's this recurring pattern during every single cycle, similar to the meme that I made, which shows a guy on a bike with zero knowledge, puts the stick in the wheel, tries what a coworker said, tries what his uncle said, and then out of nowhere fails and blames the whole industry. Crypto is a scam, it's a lie, it's too volatile. All because they were not mastering their knowledge in the first place. They were listening to average sources. They did not have any mental diet whatsoever. They were just winging it, and they blamed the system. And in my books, that's not a system, that's a mood, because most people go by their mental barometer. When they see a positive news headline about crypto, Bitcoin, Ethereum, whatever, that's when they act. So these are the in and out types of people. The people that think, okay, when things seem okay, I'm going to get in. When things are neutral, I'm going to get out. When things are bad, I'm going to blame the system. They are fully reliant on their income and they don't have freedom, which means every single dollar that lands is going to their loans, their mortgages, and never to being able to buy back time around their loved ones. And it's not on them. Like, the point I'm trying to bring home is like, I used to think I'm not good enough. I used to think this is about me. I'm not good enough at my job. I'm not good enough within this industry prior to like having that whole shift in my life. But the point is, it was not about me. It was about the root cause of the problem, which is money. For that reason, I believe there's so many side hustles out there, but that won't fix what money does the minute it lands on your bank account. And at last, most people have way too slow of a feedback cycle. When they finally get to understand a bull market opportunity, it passed, there's a bear market already. When they finally see a bear market opportunity of accumulation, the news is full of euphoria again, the headlines are green, and that's when they start to buy. See, so kind of like a shifted world. That's the whole point. During this exact time when most people are leaving, the 80% of this market going neutral, that's where the money is made. And most people simply don't get that. Because if you finally get a skill within 2 to 3 hours a week, you're able to make money on the side without trading. That's when you look completely different at a space like this. That's when volatility becomes predictability. That's when you start to see that income should not derive from where our price is going, but whenever there's transactional volume in the first place. I'm pretty known for my quote that says, market will always have you waiting for them, but they won't wait for you to take off. And if you're watching this video, either on your path of learning how to make money online or kind of being hesitant about it, both are fine. Just know standing still is actually a bleeding position, because every single year we're seeing this 5.6% increase in the money supply. Was even worse during COVID-19. We can see the actual CPI data to be at 3.5%, which is a whopping 9% that you need to beat on your money. This means on every $100,000 that you're making, you're burning a $9,000 without you even knowing. This gets burned through expenses getting up, things getting higher in terms of like what you're paying for them, all that stuff. And most people simply don't factor that in. Sure, you can see those dollar digits stacking on a bank account, but that's nothing as opposed to what the cost of living ends up being. All I hope by this point of the video is that you understand that a quiet market usually is not quiet. In In fact, whether there's hype, whether there's euphoria, whether there's fear, panic, whatever, I am generating a fee because I don't rely on prices. I rely on the amount of people that are moving assets on a day-to-day basis. Irregardless of me running this position, by the way, it just happens millions of times every single day. A nice little second benefit this gives me, obviously, is that I can accumulate before the crowd because, again, those fees land, doesn't feel like salary. I take it out, push it back into my positions, and so on and so on and so on. So as a third one, while most people wait for proof, for the news headlines to return and everything, I prefer to join the table with those big guys, the banks, and everybody that is just joining the market right now. These guys don't need the hype. They know the data. They see the statistics. They know these things like the unstakes. They're virtually not even present. There is so much opportunity right now. But of course, everything is playing as a whole. Like the news is not going to promote it. Nobody's going to be flashy about it. I'm not a hype man myself either, but seeing the data points here should tell you something. Now, just to get clear on how this model works, imagine a currency exchange booth at an airport. You see them everywhere, every single time you travel. So there's a guy sitting there, has his own little cash register, and people want to go from euro to dollar to yen to whatever, currencies all around the world. If there's only like $100 in this cash register, then that ends up being a headache because people cannot move. Like there is no way for the queue to get shorter. People are waiting, right? Transactions are going to get more expensive. And the same goes for crypto. The way I wish somebody explained this to me when I originally started is that crypto is essentially like one big Google sheet or Excel sheet where money moves either in or out. Now, on every single of that in and out movement, these so-called buyers and sellers are paying a transaction fee on their efforts. Now, again, quick recap. If there's less money in the cash register, then those fees are going to get higher, the queues are going to get longer, and it becomes harder to move money. So what the blockchain does is it rewards people to step in to provide some of their assets so that now everyday people pay lower fees, and as a reward, you get a cut of that whole pool of fees that ends up being generated. The best part is that all of this only takes 2 to 3 hours in a week without needing to be glued to a screen or do any trading at all. Now, just as a matter of giving you a quick example of a position like this, what we're seeing right now is how that position looks. So on the upside, we're going to have full exposure into a stable coin, which means as soon as we go on our way down, we're going to have full exposure onto that strong asset. This means when that strong asset starts to go up in price again, we're going to get full exposure into the stable asset. So in simple terms, imagine this would be Ethereum. If Ethereum goes up 20%, what happens is if there's a $10,000 inside of that position, now 10,000 goes all the way up until 12,000, and that's when your money freezes. Now, there's a pro and a con to that, because if you would have just had full exposure in Ethereum and it did a 2x, whatever, you would have made way much more money. But then again, you made fees in the whole process of being in between those lines, which is 80% of what the markets do, by the way, in favor of these positions. And then two, you would have taken a profit, which usually people don't do. So it's kind of like this vehicle where you get, I don't like the word forced, but it essentially comes down to it. The logic and the data inside of this is kind of putting you in a position where you have to take a profit or where you have to buy on its way down. So either you get a profit or you buy the asset on its way down. And then the trade-off, again, if the price shoots up, there's some lost opportunity there because holding on to it liquid would have made you way much more money. But then 80% of the market going sideways, most people make nothing at all. They're just hoping and praying for the market to move, whereas I am making money that allows me to scoop up these price levels throughout the cycle. On top of this, these positions are generating roughly 30 to 40% per year. This is more than every single traditional investment vehicle out there, with a very limited risk to it because of that stable side to it, and we're not in a position where we need to trade or take substantial risk. So we're half stable, half strong, position moves and generate fees. Fees land daily, and then at last there's only two outcomes, again, which is taking a profit or which is getting on your way down towards scooping up a cheaper price level of the strong asset you always wanted. Either way, you end up taking a profit or a discount. When we want to reinvest those fees, we do that on days where the gas fees are the lowest, which is essentially Sunday. Now, next, what happens is we take a 80% split of these fees so that essentially we could buy cheaper Bitcoin, cheaper Ethereum, cheaper whatever assets you believe in. The point is, this makes you an income that allows you to scoop up cheaper assets while the majority of people wait for the big boom. And then at last, there's a 20% leftover due to that 80% you reinvested that now you could just push back into the initial. Einstein calls it the 8th world wonder of the world. I call it compounding. The point is simple. It's a wonderful thing if you know how to do it. That brings us to two perspectives on the same market, which is either having like that asset, like owning it, waiting for a lawsuit of Ripple to get over, waiting for Bitcoin to finally pass 100 grand again, or being in a position where you reduce your exposure and you consistently just make fees, where still you could build up that same exposure without needing to touch your active capital. So just a quick recap here. Essentially what we do is we consistently scoop up every price level within those positions. On top of that, we are generating fees. Those fees we can reinvest whenever we want to, and we go immediately liquid on them, which means I don't need to call a bank, a broker, a real estate guy, wait 2 to 3 months, or have to skip the Sunday until it's Monday. None of that. Whenever I want to get my fees out, those fees land on my wallet, I get them to my Apple Pay, and I spend worthwhile moments with those I love the most. As soon as that lands on Apple Pay in my daily life, I just end up getting Airbnbs, travel the world, get my plane tickets, take my dad to Tomorrowland. All these tangible experiences are possible with digital assets. So if you prefer something you can touch, you might want to think about it again. I generally believe, by the way, that crypto is not the scariest part. It's the approach that people are taking. You hear these stories about multi-level marketing structures. Oh, through a coworker, I found like this website where I needed to sign up to whatever. Send a bunch of greeting cards. Then there's a lack of people below you. And now, like, you're making money until the company dissolves and boom, the income is kind of gone. Same with any token website, any stock website. The income works until it doesn't. Then the next one is actually fake websites and ads. So you could Google Binance or Kraken or Coinbase or whatever and click on the first thing you see. Usually that's a Google ad. When you do that, they end up making a complete copy of the website and end up stealing your money. Could even be a man-in-the-middle attack, by the way. If you use your website in the middle of a public airport, they could even, when you're on the right website, make a copy of a wrong one. You fill out your information and boom, you're hacked. Last one is a poisoned airdrop where eventually you sign up for this mushroom token drop tomorrow at 7 p.m. Now your wallet is ready, you get the mushroom coin, you click on it, you engage, you buy, you sell, whatever, and boom, your entire wallet gone. Oh, but crypto is such a scary space. I think it's scary. I feel sorry for these types of people. But then again, based from my knowledge, I know these people did not secure their whole strategy with a hardware thing. They don't have a button they need to physically press in the room before money leaves. Is that possible? Yep, most people didn't know. So, and that is the whole point I'm trying to bring home. It's more a matter of lack of skills than anything. So for that reason, I don't believe crypto is the scariest part of all. It's the people trying to crack the code overnight with no knowledge or no security at all. Because what I see over and over again is the prices in the market are low. For me, this means I can get these positions active, earn fees, and buy some of the most lowest asymmetrical entry prices ever. For some people, that's fear. For some people, it's too low. It's scary. I don't know where it's going to go to. For me, it's one of the most opportunistic moments because if I can get Ethereum below $2,000, if I can get Bitcoin at a certain price level with money that is not even my active income, but fees from those positions, it's the best thing ever. Next up, what I see is those accumulations that I've done throughout time are going up in value, whereas the majority of people finally only now wake up to see, oh, this market is going up, I should enter. But what happens in the next phase is that the investors who were early are now taking their exit. So essentially 80% to actually 100% of retail that is gone right now that eventually comes back when the news is green now gets dumped on top of them because of the whole way this structure works. It's called using US exit liquidity because in the end, these bigger investors like banks, myself, my students, like any type of level within the whole hierarchy are now taking their exits while you are just only seeing the opportunity. Just know waiting for certainty is not really like a strategy. It's the only point of that strategy is losing 9% a year. And for that reason, I don't believe the window is going to announce itself. So you shouldn't really think about fear, because the biggest fear is not taking action, not generating those fees, not taking this asymmetric opportunity right now. Outside of the market, by the way, I have a bunch of great people saying great things, like Jelmer, a guy from the Netherlands, that says this mastermind is for you to learn how to do crypto safely, how to set up your security to prevent being scammed. There are no trading signals, important one. They do not take your money to invest for you. You have full control over your own money at all times. And if I could add something here, we don't take a profit share. This means on all the profits my students make, we don't take anything. Arno is sincere, and Raymond was patient and knowledgeable with the onboarding. Just the security aspect of doing crypto is worth it. If you don't have that foundation, you're not really in the game. You're pretty vulnerable, from Peter. And then, of course, the last one, I'll have to tilt a little bit here. This is, Freedom Academy stands out because it's grounded, honest, and responsibility driven. Arno doesn't sell dreams. He teaches how money and crypto actually work. No hype, no shortcuts, just real education and a solid community. So below this video, you're going to find my free school community. It's free to join. There's nothing attached to it. It's a community that I made to get a bunch of like-minded people from all over the world to unite and talk about this exciting topic and opportunity. There's free tools and resources inside of that community that I'm only pushing out there and not on a single other platform. That's a promise. And then at last, there's an application that you could do below this video, which is inside of the group. It takes about 3 to 4 questions at max that I want you to fill out to be able to potentially consider you to be added to the group. We're capping the membership spots, by the way. I don't want to make this a huge group. I love it when things stay personal. I'm very close with my students. So if you want to get in, now is the time to click on the link below the video. And in case you want to learn more about how I recently took my dad to Tomorrowland, there should be a video on the screen right now that shows you exactly how I did that. And of course, make sure to subscribe to the channel if you didn't. And that's how you build real freedom without needing to trade or hope and pray the price moves your way.